Welcome back to PM Express Business Edition. The Securities and Exchange Commission in 2019 revoked the licenses of some fund management firms over a breach of regulatory requirements. But after 2 years of this industry shakeup, has the required confidence been restored in the industry or sector? And what is the state of those recoveries that were going on and payments of funds to those persons that invested in those firms out there? Is the sector that safe and sound as we've been made to believe, or there are still some challenges out there? On PM Express Business Edition, we look at the state of the capital market post-cleanup. Do we still have the confidence in, or there are still some challenges? And I'm indeed pleased to have with me the Director General of the Securities and Exchange Commission, Reverend Daniel Tete, for us to join us on PM Express Business Edition as we look at the securities industry, the capital market, and what other issues that are relevant to you. This is PM Express Business Edition. We'll take a short break and we'll be right back. Welcome to PM Express Business Edition as we talk about the state of the capital market post-cleanup. We're more made to understand and believe that after this cleanup, yes, the confidence should be back and everything should be settled. But is that the situation on the ground when it comes to the capital market, the investment space, and also payment for those who had their funds locked up in those liquidated fund management firms? We have with us here the Director General the Securities and Exchange Commission, Reverend Daniel Tete. Thank you so much, Reverend, for having time for us, your busy schedules, and I'll say we indeed really appreciate it.
My pleasure, George, and belated happy birthday.
Thank you so much, Reverend.
I'm sure you had a good time yesterday.
Definitely, Reverend. It was grateful to God for another life and
absolutely
more exciting years ahead.
Absolutely.
And grateful to have you in studio as part of my birthday gift.
Exactly. Actually, that's one of the considerations.
So, Reverend, I mean, how are you doing? I mean, it has been a turbulent past 2 years. Are you taking some sigh of relief now, or it's still quite difficult for you because you have someone who placed all his funds in a company that was approved by SEC, and that person is still struggling to get her money?
Well, for me, I would say it's gratifying to note that the exercise that we embarked on, I would say from 2018, when we started doing the background work and all of that, we have seen it yield the expected results, and we are seeing the industry still forging ahead. And I'm particularly excited because we, as you may know, we recently launched our Capital Market Master Plan.
Yeah.
And we are really gearing up to implement some of the very interesting initiatives that would move the Ghana capital market to the next level. So I would say I'm happy. Indeed, when we were putting together the Capital Market Master Plan, one of the conditions that the committee that had been assigned the work came up with was a need to do the cleanup, because you cannot build on a weak foundation, you know. And so that's why I'm saying that for me, I'm happy that we are at the point where we can begin to take steps to move the Ghana capital market to the next level. So for me, exciting times are ahead where the securities industry is concerned.
Indeed, exciting times ahead. So I knew that at the point in time, just helping us as in where we are right now, some auditing was done. It was established that George Yafe, Amma Mansa, and all the rest were supposed to be paid X amount of money. Now, a bailout fund was put, if I can use those loose terms here, to pay certain people that their auditing has been done. As we speak today, February 17th, can you help us the status of that auditing that was done, how much has been paid out, and what are the steps that are being taken to pay the rest of those who've had all their papers and documents verified?
Okay, so before I answer that question, I think in your introductory remarks, you were wondering about the state
of the capital market. Critical. I mean, sorry, to actually speak right now.
Yes,
sorry.
Yes. So maybe I want to start with that. I'll come to
that'll be necessary for us. Thank you so much.
Yeah. So if we take the capital market, I think it's important to understand that there are different dimensions or segments. So when we talk about the capital market, for instance, we should think about the exchanges. So we have the Ghana Stock Exchange, we have the Ghana Commodities Exchange. So the question is, how are these exchanges performing? And I'm sure you know that, for instance, last year, the performance of the Ghana Stock Exchange was very solid, one of the best in the world, I think the second best in Africa. The Commodities Exchange was also doing well, trading in about 5 commodities. So if you take that aspect, we can say that there is definitely some energy. You know.
How is regulation helping to push some of these markets? Because there's always sometimes a challenge that too much regulation stifles the growth of some of these markets. When you look at some of these, the stock exchange, how a lot of these pensioners have placed their funds in there, how is regulation aiding the growth of these markets in terms of these retail investors who place their funds in these areas?
Well, so essentially what regulation would do is to ensure that the market is fair, so the exchanges are operating trading platforms that allow for fair trading. The regulation would ensure that the various intermediaries that the investor or the client would use are also staying on the straight and narrow, giving adequate disclosures to the investing public. You know, so basically the role of the regulator is to ensure that the markets are functioning well. Indeed, if you look at our object, our mandate is not just to protect investors, but to protect the integrity of the market.
The market as well.
That includes monitoring the market, doing your surveillance, just to be sure that you don't have unfair trading practices going on and all of that, all in the means of ensuring that investors have confidence in the market. And certainly, once you can see the market doing well. And, let me even mention for the Ghana Stock Exchange, they have a fixed income market. They call it a GIFM. And if you look at the trading volume that...
And help us here, if you talk about the fixed income market, what are you talking about here?
Okay, so there are 2 broad asset classes generally when it comes to the capital market. So you have the equities, and then we have the fixed income. Okay. So equities we refer to maybe the shares of
companies that are Talu and all the rest that are traded on it. Okay,
and all of that. But when you talk about the fixed income, you're talking about bond issuances. And in Ghana, we have the government as the main issuer on the GIFM, the Ghana Fixed Income Market. But we also have a few corporates that have issued bonds. So bonds are long-dated debt instruments that are issued by the government or the corporate to raise money. I mean, the thing about a debt instrument or a bond is that you know what interest you are getting after which period, while with the equities, there is no guarantee as to what you are getting. So those are the 2 broad, if you like, asset classes when it comes to the capital market, bonds and then equity. So I was just saying that if you look at the GIFM, that's the Ghana Fixed Income Market, you look at the volume traded, compared to the previous year, more than double. So that definitely shows that there's a lot of traction, a lot of activity, positive where the exchanges are concerned. And then if we take the asset management, because that's where you were
trying to get some clarity on.
Yes. So if you take the asset management sector, I can give you some numbers just for you to see the trend. So as at the end of 2021, that's last year, the total assets under management within the asset management segment was about 44.5 billion. Okay, that's the total assets under management in the asset management industry. Of course, we have to look at the breakdown. And this, you can compare this to 2018 of 25 billion, and then 2019, soon after we did the announcement, where it was 28 billion. Okay, and then in 2020 it moved to, I think, 31, and then in 2021 it has hit 44.5. Now, if you look at the breakdown, admittedly, pension assets contribute the largest. Okay, so as at the end of 2021, pension assets was about 29.9 billion. That's about 66% of the total. But I just want to pick out one line which for me is very interesting, and that's the line relating to collective investment schemes. Yeah. Collective investment schemes are managed, by the fund managers, just as they manage some pension funds. But because pension funds, if you like, are in a different category, we can talk about the collective investment schemes, and we can talk about other funds. When you talk about other funds, we are talking about funds of institutional investors, high net worth investors, and the like. They also do some investments. Now, in terms of the numbers, if you take the collective investment scheme, so in 2018, according to the numbers I have, the value, the assets under management of the collective investment schemes was around 2.4 billion. So that was in 2018. That was before we did the cleanup. Yeah. And then as at the end of last year, that's 2021, it had moved to about 7.3 billion. Okay, so you're looking at in 2018, 2.4 billion, and then in 2021 it's moved up to 7.3. In between, in 2019 it was 3.8, and then 2020 5.1. So you can see
these are the pension funds, or
no, this collective investment schemes.
Okay.
Like I said, the pension funds constitute the largest. Out of the 44.5 billion I mentioned as at the end of 2021, pension funds alone constitute about 66%. Because of the way the pension funds works. But I'm talking about collective investment schemes, where the fund managers have to devise schemes of marketing and educating potential investors to draw them in. With the pension funds, as you know, Tier 2 is mandatory, and Tier 3, there are some incentives why individuals would sign up. So that is almost, if you like, some kind of captive flow. But when you take the collective investment schemes and the other funds, where you find a lot of engagement by the fund managers with the prospective investors explaining how it works and all of that, you can see a pickup. And I'm trying to use that to say that we can see some confidence, because
you think that growth can be used, or it can be equated with some level of confidence? Because if there wasn't confidence in the industry, those schemes wouldn't have grown. Absolutely. In those nominal levels. Absolutely. That you're talking about.
When you talk about growth, of course, there'll be two sources. Yeah. You can look at growth in terms of new funds
that are coming in.
And then you can talk of growth from the capital appreciation based on what investments have been made. Okay, but it takes a combination of the two.
And in this case, were there new funds that have come in? Or these were...
It's a blend of the two. Okay. And I'm saying that if you look at the numbers, so in 2020 it was 5.1. And then in 2021, it had moved to 7.3 billion. That's what, about 2-point-something billion. Yeah. The question is, can you say that all just came from capital appreciation? What was the performance of the fixed income and then the capital market? So clearly, there is a component of new money coming in. So I'm saying that if you are seeing this upward trend in the AUM of collective investment schemes, clearly it shows that there are individuals out there who have confidence in the fund managers that have been licensed by the SEC and are committing funds. And so we are seeing the growth. Like I said, yes, part of the growth will come from capital appreciation,
yeah.
but it's not only capital appreciation. So if you look at this, we can say that the capital market, the securities industry is doing well. The asset management industry is also seeing, some upward movement in terms of its performance. So from where I sit, I can say that we are seeing the industry headed in the right direction.
And let's come back to the earlier question that I was asking about just getting us to the current state that we are.
Right.
Because a day wouldn't pass, Reverend, where the calls are coming in. I filled all the forms. I still cannot get my money. I knew that some bailout funds was put together. Some monies were paid. As we speak right now, just tell us the status of issues right now, those that have been paid, those that are yet to be paid, and maybe let's start what status right now.
Right. So I think it's important to indicate that when we came up with our announcement revoking the licenses of the failed asset management firm, one of the things that we put out was the fact that we had to use the liquidation pathway. And when you go the liquidation pathway, typically you have to go to court. The court will have to grant the liquidation petition, and then once the liquidation petition is granted and you get a liquidation order, then the liquidator, in our case, we had to rely on the official liquidator. The official liquidator will now take over the assets of the entity that the liquidation order has been given, and then from the recoveries, the liquidator will be able to pay some proceeds to all creditors. Okay, so I think that is the first thing I want to say. So once we went the liquidation pathway, because that is what we are able to do under our act. We had to go through that route. However, what we did was to engage the government and to say that giving the critical role of the capital market in terms of mobilizing patient capital and given the fact that we need to cushion, if you like, the affected investors. So we proposed a bailout program, which the government graciously agreed to do. So the bailout was government's way of intervening or throwing
interim cushioning of these investors.
So basically, the government said, "Okay, I'll take care of your exposures to these failed asset management firms, and then I would handle or I would deal with the official liquidator when the official liquidator is able to recover any proceeds. Then the government will have to, stand in place of those investors and then have that engagement with the official liquidator." So that was how the whole thing was structured. Now, government to roll out the bailout had given two conditions. And condition number one was that the claims of the affected investors needed to be validated to be sure that,
that George Raffin did owe X amount of money.
Exactly. And then two, the liquidation order must be granted. Okay. So if the liquidation order is not granted, you find that if you are maybe you saved or you invested with a particular entity that where the liquidation order hasn't been granted, then you will not be able to participate in the government bailout. Okay? I'm just giving this background.
This is very necessary to get the bigger picture.
Would understand. Okay, so that is that. Then another thing that I think I need to put out is that government's idea in rolling out the bailout was to use a special purpose vehicle, which was envisioned to operate as a mutual fund. And the idea of government was to use the bailout to create a mutual fund that will become, if you like, the biggest mutual fund in the CIS, the collective investment schemes industry, or a model, you know. So the idea was that it wasn't going to be a pay box, as in just
come and take the money and go. Okay.
Because indeed, the clients of the failed asset management firms put their money into investment. In other words, they decided to invest, put the money to work. And one of the vehicles that we have in the securities industry is the mutual funds or the collective investment scheme. So that was the intent. So government said, okay, I have these two conditions. Your claims must be validated. The liquidation order must be granted. And then the other dimension is the fact that government is saying that, well, I'm not going to use a pay box. I'm going to create a mutual fund that you can take out your money as and when you need it. And for this particular mutual fund, we had two tiers, tier 1 and then tier 2. So tier 1 is the liquid portion, and then the tier 2 is the medium to long-term portion. Okay, so there was a certain formula that was applied, in terms of the amount that will go into the tier 1 and the amount that will go into the tier 2. So that's just to give the backdrop. Now, if it happens that someone says that I haven't received, I failed the claim forms for my claim to be validated. I got a notice that my claim has been validated, and yet I don't have payment. Then the question would be, is it a case of the firm having its liquidation order pending? Because I can so that there were 50 fund management firms that had their licenses revoked. Out of the 50, there were 47 of them that had claims filed against them. Okay, so out of the 47, as we speak, 43 have had liquidation orders granted. So 4 out of the 47 have pending liquidation orders.
Reverend, help me out here. And sorry to cut in there, because I think it's getting quite interesting for me myself. So if Mamiesi hasn't gotten her money up to today, despite going through all the processes, it could be that her funds were locked up in these 4 firms that liquidation are still pending, right?
It could be, but let me also quickly put in that, towards, the, I think the end of 2020, we engaged the government about the concept or the idea of throwing in a partial bailout. Okay, so and government agreed, and so the partial bailout was amount up to 50,000. So if you had a claim more than 50,000, you should have received your partial bailout, but then you will still have money. So some of the people who may be calling you may be those who had more than 50.
Maybe let's say 100,000.
Yes.
I had 100,000.
Yes. And because the liquidation order was pending, so you were put into the partial bailout. But then when the liquidation order is granted, then you are migrated into the full bailout, because the condition is liquidation order must be granted, and then claim must be validated. So if claim is validated, liquidation order not granted, the partial bailout was made available. And then if you had more money than the threshold that was set, it means that you will still have money that is yet to be made available to you through the SPV or the mutual fund that government decided to use for that. So there could be a number of reasons. One could be that, and indeed out of the four, one of them is a big player. So you find that quite a number of people who had balances in excess of 50,000, would be in a position where they haven't received the remainder, and it's because the liquidation order is pending, because you are migrated into the full bailout only after the liquidation order is granted. Then, George, there are also some people who are contesting or not happy with the validated claims that they were giving. So when it happens that way, there's room for you to engage the agent who did the validation of the claims, so that there can be some manual validation. So it could be a number of
but Reverend, facts, and I want to get some clarity here.
Yeah.
So all those who've had their claims 100% validated,
yes,
as we speak right now,
yes,
should have had part payment from that bailout fund, correct? The person is not challenging anything.
Yes,
it's not part of the four.
So the other dimension.
And I want to get that clarity here.
Yes, the other dimension is that the government bailout is voluntary. So if and there are some conditions that you have to. So there was an agreement. So if you haven't maybe assented to the agreement to assign your claims to the government because of whatever issues you have, again, you would not have received anything, because to participate in the government bailout program, you must also agree that you are assigning your right to the government. So there are some people who haven't, because it's voluntary. Okay, so if your claim has been validated, and if the liquidation order of the firm that you invested with has been granted, and if you have signed the agreement, you have assented to it, then you should have received the government, the full bailout. But if your liquidation order is pending, but you have assented, you have agreed, or you have executed the agreement, then you should have participated in the partial bailout. If for some reason you haven't, then it means that there could be some technical issues that can be resolved easily with the official liquidator and the agents that she's using to manage the payout. So that really is what it is.
But you gave a scenario about what could be the reasons. What could be the other reasons why a George, I feel that had about 50,000 in, has not been gotten anything yet? Could it be that George had the funds locked up in those 4 other fund management firms that are still being contested, or George will still get that right to get a part of that bailout?
So if George decides to accept the government bailout, if the liquidation order is pending, George should be able to receive the partial bailout. Okay. Again, some of the information that came to me was that there were some people who were saying that, well, if I accept the partial, am I sure I will get the full? So why don't I wait, and so on and so forth. So like I'm saying, once the liquidation order has been granted, you have to make a choice for the full, to accept the government bailout. If the liquidation order hasn't been granted, again, you make the choice to accept the partial bailout and wait for the liquidation order to be granted, and then you are migrated into the full bailout. So that's how it works. So a full bailout package based on the conditions for the liquidation orders pending, partial bailout, but for both of them, you must agree. There's an agreement that has been prepared. You must assign, you must execute the agreement where you assign your right to the government. Because if the government is making the money available, then you must assign your right to the government, so that if there are any recoveries by the official liquidator, government can receive the money to reduce its exposure in terms of the intervention with the bailout.
Reverend, help me. So who are these 4 other firms that we are still struggling to liquidate them, and in terms of their composition, what are we looking at here?
So, like I said, one of the 4 is a big player.
Yeah.
That's Black Shield.
Yeah, one.
Capital Limited. And then there's also Apex Capital Partners. There is also Cron Capital, and then there's Dow Jays.
Yeah.
You notice that those are small, apart from
yeah.
a Black Shield that is the biggest. And as I said, if we take Black Shield out of a total of over a little over 100,000 claims that was received, the claims attributable to Black Shield is in excess of 66,000. So clearly, the claimant on Black Shield alone, constitutes the majority of the claimant. So to the extent that the liquidation order hasn't been given yet, you find that the customers or the investors who had monies with Black Shield would only have benefited from the partial bailout. Even though I can tell you that from the partial bailout, I think over 50,000 of their claimants were fully paid. So, but you still have a certain portion who have balances.
I'll be coming for some clarity on what has been paid so far, not exact numbers, even if it's a round figure as well. Why is whoever you've appointed still struggling to reach some settlement with Black Shield Capital? It's kept quite long.
Oh, the issue of liquidation is a question of going to court. Okay, so
2 years now, or more than 2 years now. I know the bills of justice sometimes.
The process was that once we got we did the revocation. Then we wrote to the Registrar General, who is the
official liquidator,
to go to the court to do the petition so that we can see how the affected investors would benefit from the government bailout. So court processes are court processes, and what you must understand is that because it's a liquidation petition, the affected companies must be given a hearing, and there are processes. Okay, so we've been and I can confirm that we didn't get that. I mentioned that we've got 43 liquidation
out of 47 companies.
Out of 47, it didn't happen in an instance. It came in batches. Okay, because depending on how each case would go and what kind of objections would be raised, and so on and so forth. So really, it's a question of allowing the court processes to go through. And actually, part of the reason why we engaged the
Registrar General,
the government for the bailout was because we were aware that with the liquidation
it will take quite long.
It can take long. It can take long. In fact, we have instances of some firms that I think when some of us were in secondary school, the liquidation process started. It hasn't terminated.
Ghana West, is it done?
Exactly.
So they are still working on Ghana West, right?
So you see, so we said, look, government, we need to ensure that we don't lose investor confidence. So we think that the bailout should be done. It's been costly, but government said, okay, we'll do it. So with the liquidation pathway, it's really difficult to say that it can be terminated at this point, or you say that within 4 months, or within 12 months, or within 24 months, it has to be concluded. It's a court process, so you just have to follow through. And the official liquidator, in fact, I'm told that the kind of results we've received in terms of the liquidation orders is quite impressive.
Wow.
Given
how normally these things will go.
Exactly. So I think we just have to understand that it's because of the nature of the liquidation pathway.
Reverend, help me out. So in terms of payout funds, since this payment started, any idea, a round figure of how much has been paid out into the persons as well as in the rough numbers here?
So, like I said, the idea was not for it to be a pay box.
Yeah.
Okay. And the idea.
I asked that question, Reverend, because there are some who still doubt that something has been paid. And I remember there was a time where I was talking to the Registrar General and said, George, he tells me that, listen, people will come out and cry or express their concern publicly, but when they are paid, they go quiet on it. And there have been instances where somebody was paid almost like 40,000. After that, the person kept quiet.
Absolutely.
So that's why I'm just trying to help me, even though it's not a pay box, in terms of the arrangement now, how much has been paid out so far for those who signed up to the payment, and how many persons are left? Just the round figures, or even percentage terms, you help us.
So the reason why maybe I'm hesitating to give you the numbers is that we have instances of people who, after the monies have been put in the mutual fund, the tier 1 and then the tier 2, some have decided to, as it were, take part and then leave part in the fund, because the idea was for the mutual fund to be managed so that the original intent of the investors would be achieved in terms of putting their money in investment. So we have a situation where the issuance of the money by the government has been done. Some have taken it out, and then others have left it.
And help us here. How much did the government give aside in terms of the bailout funds?
No, so the total claims that came in was over 12 billion.
12 billion.
But the examined position, and let me also say that we have a situation where people still are putting in claims.
Double claims or?
Well, not double claims. Not double claims. People are still putting in claims. So you find that the figure keeps creeping up. But at the last count, it was north of 8.5 billion in terms of the claims that have been examined from the value of 12 billion. So it means that about 3 billion has been rejected. I think it's close to 9 billion now. In terms of the examined, the examined claims, so out of this figure, I will get you the exact figure in terms of what has been released.
Okay. Yeah.
But like I'm saying, I want to desist from saying people have been pay out, because the idea is that the money is put in the mutual fund, and then you access for the tier 1. You can access it immediately. But for the tier 2, there are some conditions that govern how you can take it, because the idea is for you to treat the tier 2 as a medium to long-term investment. So that is where we are. But I will give you. I can see you want your numbers, so I'll just give you the numbers in terms of what has been put for the tier 1 and then the tier 2 as well. So I'll just put it up so that I don't want to put out any number.
That is not actually the true reflection of issues on the ground.
Yes, but I just want to stress the fact that the government has made monies available to the SPV. It's called the AM Fund, Amalgamated.
And let's backtrack a little bit, Reverend. I know that also a company was set up. Is it I Stand to Be Educated, or is it GCB Capital that is managing this fund or something? Yes.
So AM Fund, that's the special purpose vehicle that government gave the money to. But just like any mutual fund, you need a fund manager to manage it. And government's intention was, for GCL to start, and then for other fund managers, to come in to support GCL. Because the idea, like I said, was for this AM fund to become a model fund when it comes to the collective investment industry. So GCB Capital Limited, or GCL, started out as the fund manager when we rolled out the bailout. But I'm aware that there are processes to bring in some other fund managers to strengthen the team, to make sure that you know, the management of the AM fund, you know, is where it should be, you know. So that is what I can say about that. So GCL, yes, indeed, is the fund, and GCL wasn't established.
No, for this.
No,
it actually existed long ago.
Exactly, it existed.
That clarity is very, very important.
It's very, very important.
Yeah,
very,
yeah,
very
yeah,
important.
yeah.
GCL wasn't established just because it existed, you know, to offer fund management
services on this particular case. Yeah.
Yes. So from the report that I can see from GCL, in terms of redemption, so people who have you know, taken money out. Like I said, some would have left the money in, but those who have actually taken money out, and this is verifiable, total redemptions, and this is as at 28th of January.
This year?
Yes, this
year.
You know, total redemptions from the tier 1 is 1.54 billion. 1.54 billion, you know, from tier 1 redemption. So that is the amount that has been, you know, taken out from the tier 1. So I think that is a very critical, you know, number to note. You know? So there are people out there who have, you know, received that money, and then for the partial bailout. Let me pull the figure out. The partial bailout, again, the total amount that has gone out is 1.34 billion. Okay. So if you take the partial bailout, 1.34 billion, and then you take the tier 1, where you know, you can make the bailout 1.54 billion. If you add it, that's what, almost 3 billion. Actual payouts. 3 billion. You know, so
since when did the payment start? I think it was in 2000
from 2020.
Okay,
because we did the revocation announcement November 2019, and then the liquidation process had to start. It took some time before the liquidation order started coming through, and then we engaged. So from I believe, if I'm not mistaken, would it be August, September, or thereabout of 2020? But it started in 2020 and has continued. Okay, so that is in terms of actual payout. Okay, I would have wished that you know, I think there were people who were not too sure about you know, the money, so they quickly took it out. But I think that if maybe they had stayed with the intention to keep the money in the fund for it to be invested, that would have been very, very.
But for you, looking at the nominal numbers again, as a regulator and somebody who has played in this space, what does it tell you? That after all, you know, the fears and all those concerns out there weren't justified, because these monies have actually been moved out and paid to those who've had their claims verified. Because there are some people out there who are so worried and complaining that they don't think that there was even any bailout, they don't think they're going to pay to them, and they're being told stories.
Yeah, so for those people, I would say that it's not a question of stories. And I think it would be interesting. Maybe, I don't know whether you want to do that work. Maybe you want to find some people who have actually being paid.
They won't talk to me, Reverend.
They won't talk to you, but when their money is not being paid.
Yeah. But again, so what does it what for you?
No, it shows one the commitment of government to ensure that the financial sector remains robust, because no economy can do well or function well if the financial system collapses. And I think it was a very bold step of the government to throw in support to ensure that we strengthen the financial sector, and so that is, I think, one very important point I can make from this. And I think also that for investors, it's important for them to understand that when it comes to investing, you need to ensure that you understand what you're doing, especially I call it a risk-return trade-off. I mean, depending on what you patronize, because every investment will have a certain nature or characteristic of risk and return. So it's important to understand the dynamics. It's also important to make sure that you deal with only licensed or regulated entities. You find that we have, on occasion, as the SEC, come up with announcements, for some operators that are not licensed, especially those who are scamming people with all these lofty promises of doubling your money and bring 500.
We'll be coming to that. We'll take a break and be coming back to look at PM Express Business Edition as we look at the current development in the market, status of payment, and our programs director has agreed to extend this program to 10:30 to try and see whether we can take some calls as well from you people out there in terms of the concerns you have, confidence building, what is the plan going forward. This is PM Express Business Edition. We'll be right back after this break. Welcome to PM Express Business Edition. After the break, as we track the state of the capital market post cleanup, we're looking at payments that have been made so far and how do we ensure that there is confidence in this sector despite all that has happened. And I'm engaging Reverend Daniel Ogbamitete, who is the Director General of the Securities and Exchange Commission. And this program has been extended to 10:30 and see whether we can also bring you in, the viewers, into the conversation. So those who are still having challenges in tracking and getting their funds. And I'm engaging the Director General of the Securities and Exchange Commission, Reverend Daniel Ogbamitete. Now, Reverend, you were earlier on explaining something to me about what is being done in terms of the confidence building. I mean, do you think that you've done enough as you speak right now to the Ghana Football Association is talking about bringing back the love for our national team, to bring back the love in the capital market, the Ghana Stock Exchange, and these collective investment schemes, or like Adjo Mansah would prefer putting that 200,000 under her bed?
I would say that we have implemented a number of very strong, positive initiatives that we believe, together is helping to prop up the confidence in the industry. And I'll mention a number of them. But let me quickly say that it doesn't mean that that's all that can be done, because there are a number of other things that are in the pipeline that we believe would help to bring up more confidence and produce a more robust securities industry. So let me start from some of the regulatory interventions. So we've come up with a number of guidelines, or typically you talk about regulations that should help to address some of the, if you like, the lapses that we saw. Now, one of the key lapses had to do with corporate governance. And so we have issued what we call the conduct of business guidelines that puts in place a more rigorous standard for the various capital market operators with license to handle their governance issues. And so, for instance, the insistence on the composition of the board, because, what did happen really, some of the boards were not really working the way they should.
Yeah.
Even the composition, there was an issue. So if you look in the conduct of business guidelines, it has a lot of, very strong provisions to ensure that corporate governance is practiced the way it should. We've also come up with licensing guidelines, which basically deals with, how people can be allowed
into the space.
Exactly, because that's one of the ways to
check that.
To check that. So we, for instance, have increased, the minimum capital required to ensure that if you want.
And how much is it as we speak right now for new entrants? Sorry for the clarity there.
Well, it depends on the different...
Your line of business.
Yes,
okay.
But if you take fund managers, we've moved from 100,000 to 2 million.
That's huge.
Well, because I think the last time it was said was 2003. And the question is, if you look at the work that a fund manager should do in terms of what kind of structure, both human capital and then technology would be required, to do a good job, But also the idea was to make sure that the barrier is high enough so that
avoid,
you have to be a serious player,
to play in that space,
to come into that space. But quite apart from that, within the licensing guidelines, there's also the element of approving of directors. Okay, in the past we really had the arrangement of notification, but we have moved beyond notification to approval. So you have to be approved before you can qualify to function as a fund manager. And you find that within our licensing guidelines that we have issued, there's a lot of emphasis on the principle of being fit and proper. Okay, so basically the licensing regime has been made more rigorous, just to make sure that before you can enter, you are fit and proper, and you mean business, and you're not just coming to take advantage of some gaps there. Then another guideline that we have issued is investment guidelines. Now, you would notice that part of the challenges in the asset management space had to do with some of the fund managers giving guaranteed returns. And some also dabbling in related party transactions, which went bad. The principle of arm's length wasn't practiced. So the investment guidelines that we have introduced is our attempt to ensure that the fund managers operate in a certain manner. So, for instance, you are supposed to execute an investment management agreement with the client you have. So if it's an institutional client or a high net worth client, you must execute it, in which you must ensure that there's full disclosure of what underlying investment you are going to do. Because again, you had a situation where people just took their monies to the fund managers, had no clue what the fund managers were going to do with the money. The fund managers just promised them some, returns. Now, again, in the investment guidelines, the issue of not guaranteeing returns, is also enshrined. Of course, we came up with a directive in 2018 stopping that. To make sure that you don't have fund managers who don't have the balance sheet, to do that. Those are some very critical guidelines that we have introduced to deal with licensing, how people come in, and then the conduct of business, which deals with the corporate governance issues, and then also investment guidelines that specifies what a fund manager can do, and especially the element of disclosure, because you may have a huge appetite for risk, and so it's important that when with the plenty money you have, a fund manager should engage you so that he takes into consideration your risk return appetite. And then there's also full disclosure, there's regular reporting, just so that you are clear on what is happening with your investment. So that is very, very important. Now, in terms of what I can say from the institution, that's the SEC side, for instance, we are migrating from the compliance-based regulatory approach to the risk-based regulatory approach. And indeed, regulators all over are migrating from compliance to risk-based. Compliance is almost like having a checklist. Okay, you have this, you have that, you have that. But beyond giving, emerging challenges, and it's not just here in Ghana, most regulators are moving to a risk-based supervision so that you can pick up trends earlier, and then you put in the necessary regulatory interventions, to avoid creating, a problem. We have also strengthened our enforcement unit. We have an enforcement manual we have come up with. We have also done some recruitment to strengthen our investigations unit. We have also embarked on what we call a digitization agenda to digitize our operations. There's a regulatory compliance portal that we are working on, but actually in the interim we have built some portal that allows for our market operators to submit information electronically that aids, receipt and analysis and all of that. So that is happening. Then on the front of investor education, again, we've been, because really one of the challenges that we identified, that from this cleanup was the fact that people were not well informed. For instance, I can talk about the principle of diversification, where someone would take all his retirement earnings and just go and put it in one place. Exactly. So we have also looked at the issue of investor education. We've done a number of that, using social media. We also introduced a program we call Time with the SEC, where we identify various segments. We've done one with the media, we've done one with the law enforcement agencies. We've gone to Takoradi, to hold a time with the SEC where we had people, we educated them what we do and how the market operates. So, but we have an even more elaborate plan, to sustain the investor education, because we don't want it to just be like
a one-off thing.
A one-off thing.
Reverend, let me. Okay, so
let me just mention the last. And then we've also taken steps to look at an investor protection fund. Okay. Because we don't have one, so that process has also started, so that we can have an investor protection fund, especially for investors.
All other things being equal, when are you hoping that they will be operationalized?
I think if I want to be
period, not exact dates I'm looking at.
Yes, I would say that, by the end of this year, the framework should be in place. You need to go through some processes. We're going to get some we have a concept paper, but we need some consultants to do some work. So once the framework is in place, then you have to then look at the funding into it. I believe by the end of this year, the framework should be in place, because I'm aware of some work that has gone on, and we should have some money, coming through, from
next year.
Yes.
Is it be modeled on the depositors fund, just like what Bank of Ghana has? So when future this thing, a fraction of your money will be paid to you.
Because the idea is that, for the banking sector, that's the
depositors fund.
Deposit insurance.
Sorry.
System, covers that. But in our area, of course, for the stock market, the maintain a fidelity fund, to deal with that. But we need a broader investor protection fund, for the industry. So some work has started, and I believe that, by the end of the year, the framework should be in place for it to be set up, and then we should see some inflows into that fund.
And this is PM Express Business Edition. As you look at the state of the capital market, engaging the Director General of the Securities and Exchange Commission, Reverend Daniel Ogbamitete. You're looking at the process of how far we gotten in terms of paying those investors that place their funds in that fund management firms that have been liquidated, and what is the way forward, bringing back confidence into the sector. My producers will put the numbers beneath the screen for you to reach us and reach Reverend. For all those who have some concerns about their status of payment, you can reach us through and see what answers that we can provide to you in terms of your payment, your concerns. This is on PM Express Business Edition. So let me get back to Reverend Ogbamitete. And Reverend, there are some out there who are also worried that, Reverend, I went out there, or Auntie Mansa went out there to place her funds in Kojo Express or whatever, because that firm had been licensed then. I woke up one morning and that firm has lost their license, and I'm still struggling, and they can't forgive the institution sec, and they are still struggling with this confidence that these things you're explaining to us, that I can still come and play in this space.
George, I think for one thing, we can say that, with the intervention of the SEC, government has rolled out a bailout package. So that shows the fact that, once you deal with a regulated entity, there could be some intervention. Of course, I'm not saying that there would always be a bailout, but I'm saying that it's better to deal with a licensed entity because your options for redress are more. But I think it's important for investors to understand that when they are putting their money into investment with any fund manager, they have a responsibility to ask questions, okay, and to get an understanding of what the product is. One of the icons when it comes to investing, and you know him, Warren Buffett, he says that he doesn't invest in something he doesn't understand.
Reverend, let me see whether I can pick this call. Albert from Bong. And Albert, if you can be as brief as possible so that we can take in more calls, I'll be so grateful. Albert, go ahead with your question for Reverend Daniel Ogbamitete, please.
Thank you. Good evening, George.
Thank you so much, sir.
Yeah, please, I would like to find out from Reverend Dr. Ogbamitete that we, the investors of Blackstone, formerly Gold Coast, according to him, he said the mutual funds are not affected by the revocation. And the funds has been transferred to Ashfield. Up to now, Ashfield is not giving any correspondence to the investors. And we are having difficulty to access our mutual fund called Gold Money Market Fund. I would like to know from him, what are the steps he's putting in place to enable the mutual fund holders access their money?
Albert, Albert, if you can be as brief so you can, okay, you go ahead. I'll allow you to go ahead, yeah.
Second question, he said liquidation processes take a longer period. Staffs are complaining. What are the modalities and plans put in place to reduce the sufferings of the employees?
All right, thank you so much, Albert. And so brief, I appreciate it so much. Kwabena from Tema. Kwabena, can you go ahead with your question, please?
Hi, George. Good evening.
Go ahead with your question, please, Kwabena.
Yes, I'm a customer of First Fund and then Heritage Fund. I've listened to your program and I see that Reverend did not mention anything about that. Could he talk about it? Because we've not received any funds from First Fund and Heritage Fund.
Okay.
That they started with BPL, now they've moved to one other fund manager. I want him to update us because when we petition them, they don't get back to us. I mean the SEC.
Thank you so much, and I think it would be great to let Reverend respond to some of these calls that have come in, Reverend. Yeah.
Yeah, thank you. I think was it
Albert from Pong and then Kwabena from Tema. Yeah.
Yes. So yes, he's right. I think because of the line of questioning, I didn't get to mention the fact that some of the fund managers who lost their licenses were managing mutual funds and then unit trust. Now, the unit trusts and the mutual funds are also licensed by the SEC. But when we revoked the licenses, we didn't revoke the licenses of the mutual funds. So the mutual funds and unit trusts didn't, as it were, qualify to come into the bailout program because they are separate entities from the fund managers. The issue was with the fund managers. So what we did was to instruct the board, and that's again in line with our regulations, to instruct the board to appoint new fund managers. Because indeed, I think what investors in mutual funds need to understand is that it's in their power to appoint and fire the fund manager, in terms of together with the board, because it is their fund. Okay, so if the fund manager is not doing a good job, you can fire the fund manager and appoint a new fund manager. So when we revoked the licenses of those fund managers because of their regulatory infractions, we directed the board to appoint new fund managers. So the board went through some processes and they did that. I am aware that I think First Fund and Heritage Fund, there have been some issues in terms of the first fund manager that was appointed. I think there were issues with the board. It came to our notice. We met with both the board and then the fund manager at the time. Well, at the end of the initial contract. And in any case, what happens is that the board would give the fund manager maybe a contract of X number of years. Because like I said, they can renew the contract or they can fire. So they've had to change the fund manager to a new fund manager. But again, I'm aware that I think the old fund manager tried on, I think, a number of occasions to have some meetings with the shareholder. I mean, the way it works for a mutual fund or a unit trust is that the unit holders or the shareholders are called into either a general meeting, annual general meeting, or an emergency general meeting, and then they have a discourse on what is happening to the fund, And so that's what our expectation was, that the board would do that, But it looks like, there's been some transitional challenges, probably attributable to the fact that there may be some underlying concerns with access to information for some of those funds. But I would urge the shareholders or the unit holders of these funds that are having issues, they should file the complaint with the SEC. They should also engage their boards that. And they know the board. In fact, when they go for general meetings, they appoint or they vote for
and
the
get
directors.
Let me bring you another call. Ni Tego from McCarthy Hill. Ni, can you go ahead with your question, please? Ni Tego, if you are there, can you go ahead with your question, please? From McCarthy Hill. Ni, I can hear you.
Oh, okay, yeah. Oh, okay. Yes. Okay. First of all, Reverend, how are you? This is a friend, Yamatego. And the question I'm asking here is that most of the investors, or who put their money in this capital fund, are not well educated. Okay, it's where they put their money, like the quote from Warren Buffett, that he don't put his money where he's not knowledgeable of. What are they doing to put up more education measures so that most of the people who put up their money into this fund manager will really be aware of and have knowledge of what their money is doing for them and what are the risks involved in putting their money into such funds?
Okay.
Thank you.
Okay, thank you so much. That's more of education. Let me go to Samuel from Kwetia. Samuel, can you go ahead with your question, please?
Yes, thank you very much. I want these questions clarified for me by the boss. First off,
have you lost Samuel?
yes, I'm still here.
Can you go ahead with your question quickly, please?
All right, sir. I did avail myself to the bailout process and received the principal sum of what I invested. No, I'm here. Yes, I availed myself to the bailout process and got the principal sum of what I invested. But prior to that, I had invested for over 2 years, and I haven't received any interest whatsoever.
Okay.
I want to ask if the interest that had accrued over the period will be given in the event that the fund manager. I was actually, by the way.
And Reverend, I wanted thank you so much, Samuel. We appreciate so much.
If the license is restored or if the liquidation goes through, will I be giving my interest? Thank you.
Okay, and I think that, Reverend, there's a general question about people asking about whether they're going to get interest since the funds are going to be spread over a period. And I want you to know that to clarify. Let's pick our last caller, that is Sarah from Adenta. Sarah.
Yeah, good evening, George. I had 2 questions, but one has come up already.
Okay, thank you so much.
That was about mutual funds. The number of clients out there who invest in mutual funds and are confused. So I wanted to ask Reverend to kind of throw some light on it. That has been done already. My second question is that I need Reverend to give us the difference between the partial bailout and then the tier 1, because he mentioned that some payment had been made under partial bailout, and then some payment too had been made under tier 1. I thought they were the same.
Okay.
So if he can show some light on.
Okay, let me pick David, our last caller from Techiman. David.
Okay. Mr. Yakun, good evening.
Good evening, boss.
Yes, I am speaking from Techiman, and my name is David.
Can you go ahead with your question, please?
Yeah, what I want to find out, Doctor, is that, Mr. Sir, is that I know the process at the court.
Can you speak out, David, and wrap up with your question, please?
Yeah, I want to ask Reverend Mr. that the issue at the court, as I'm speaking to him now, can
Okay, thank you so much. And Reverend, I see whether we can quickly, some of the general questions that run through education is one, and the clarity, so that we can wrap up, since our time is running out very soon, Tori.
Yeah, thank you. I mean, so the point about education is clear, and I think I alluded to the fact that we have taken the challenge to implement a sustained education campaign, and this year we are looking at even going beyond into more regions, to have, if a town hall meeting, just to let people do that. But we'll do still a lot of engagement on social media, and also use all the various channels available just to get the message out there, because we need to keep informing people. We believe that an informed investor is a well-protected investor. Then Samuel asked a question about, he said he had got his principal and interest. So the way it works is, when you file your claim, as at the date of the revocation, the agent of the official liquidator basically will validate the claim. And the claim, the agent doesn't differentiate between principal and interest. It's the claim, because the bailout was premised on government making you whole as at the date. So if the validation has been done and you are not satisfied, you can always go to the agent of the official liquidator and say, I think that my balance should be more than this because when I invested this was the interest, So it's not as if you will be paid principal and then interest later. So it's a validated position that you are paid. That is the plan. What has been validated. So if you have issues with the amount validated, then you have to go back to the agent of the official liquidator and go with further and better particulars to show why the money must be more. And then Sarah wanted to find out the difference between partial bailout and then the tier 1. So the AM fund, which is the vehicle that government used to do the bailout for the securities industry or the asset management sector in particular, it has tier 1 and then tier 2. So tier 1 is the, if you like, the liquid form, and then the tier 2 is a medium to long-term one. And there are some conditions or restrictions on how you can access that money. What we are hoping is that investors would allow the fund managers to manage the funds in both the tier 1 and then the tier 2 to generate some returns. I think you're asking about some whatever returns can come. But the partial bailout was introduced towards the latter part of 2020 when we looked at the trend of the liquidation orders that were being granted and the fact that there was quite a bit of, actually I call it stress in the system. I've been in the office where I've had to go out to meet clients who, for instance, had stroke and couldn't climb up. So those are very, disturbing experiences. So the idea for the partial bailout was for government to throw in that intervention just to cushion the investors, and that was for firms where the liquidation order hadn't been granted. Okay, so and the formula was up to 50,000. So if your claim was less than 50,000, it means that under the partial you'll be fully paid. If your claim is more than 50, it means that after the partial bailout, you can still look forward to the remainder when the liquidation order is granted, and then you are rolled over into the full bailout. Okay, so tier 1 and partial bailout are not the same. The partial bailout was just for the firms that the liquidation orders were pending, and it was up to 50,000 to provide that cushioning. But once the liquidation order is granted, then those individuals are migrated into the full bailout, provided they have balances in excess of
Reverend, if I don't ask this because I know a lot of people will be angry with me, in terms of proactive supervision and clamping down, a day wouldn't pass with we hear the announcement of money doublers and several investment houses that are springing up on the internet space, promising, and you ask yourself, are people learning? I mean, what is SEC doing about this thing, about being proactive and dealing with these firms that are coming up every day?
George, I think I said earlier on that when I was talking about the things that we've done at the SEC level, that we have done some recruitment, so we have a strong investigations unit. And this unit, in fact, I went through their case register recently, and I was really impressed. Apart from tip-offs or complaints that people would send in on their own, they've devised systems, and of course I'm not going to disclose their modus operandi, but they have devised means by which proactively they pick up these things. Now we have forged a strong relationship with the law enforcement agencies, and so I would like to issue this warning to the people behind these schemes that they should stop, do the right, stop this coming, because if you are picked up, the law will have its course.
Reverend, time is not our best friend, but I also appreciate for that extra 30 minutes you decided to spend with us in studio here and granting my birthday wish to join me in studio here for this program. Reverend Enogbami Tete is the Director General of the Securities and Exchange Commission, explaining to us how far they've come in terms of the capital market space and what they're doing to bring back the love, just like what the Ghana Flow Association has been telling us about the Black Stars. This is PM Express, Business Edition. Have a great day. you.